Good morning. Ohio. Ni hao ma. Bom dia. Thanks for letting me play the music from my wedding. You guys ready? 5, 4, 3, 2, 1, boom. Hit it! All right, let's go. Market is the beginning. Welcome, welcome, welcome. Today is the day, the most important day, because it's now. That makes it very important. So today is a Thursday. Lots going on in the market. Hedge funds fighting hedge funds. Trading groups fighting hedge funds. Everyone's fighting. This is kind of it, right? This is a frothy market. Everyone's now scrambling to figure out how to make a buck. And the sick, the weak, the lazy, the stupid, the degenerate gamblers are getting crushed. Nice. Good. 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 Nice. Fine. Great. Good. So anyways, I'm super happy with all that. Yeah, like I want the stock market to come down so I can buy it. That's great. Cool. So lots of things are moving my way, which is great. So I got a dry powder ready to go. Double the powder, shorten the fuse. So anyways, so what will we do? We'll do technical analysis, fundamental analysis. If you want me to do gold or oil or Bitcoin, euro, dollar, yen, nat gas, I don't know. Let me know what you want to do. We'll cover it today. But you got to give the like, you got to subscribe, and you got to leave comments on the recordings. And don't forget, treat your fellow traders in the chat today with dignity and respect. If you're a spammer and if you're a hater, we're not interested. Go somewhere else. So without further ado, 3, 2, 1, hit it! So let me remind you that trading is risky. It's not appropriate for everyone. Past performance does not predict future results. Do not risk money you cannot afford to lose. Please stay small, stay humble, focus on the long term. Never, ever risk money you cannot afford to lose. Hey, my name is Wayne. Whoa, this camera's always like... Anyways, hey, my name is Wayne. I'm a currency trader just like you. Been doing this for a very long time. I'm still in love with being a trader, an investor, an economist, a financier. This is a really cool gig. I know it's a struggle in the beginning. There's lots to learn. Ask questions, get involved. I mean, again, when I started, there were no resources. Now you have lots of resources. And I think this is my 15th year of doing YouTube videos, more than 5,000 videos on YouTube associated with my work. So very cool. At least you can start with that. And that is for free. It still comes with a couple of obligations. Like I said, you have to like the videos, leave comments. And then, of course, visit tradersway.com and open an account. Tradersway.com. You can trade currencies, some cryptos, you can do energies, you have some metals. It's a nice that feels so good. So it's a nice combination of a little bit of everything. Tradersway.com. Open out. You get in the bottom right hand corner. There's a form for a demo account. Start with that. Check it out. You'll like the execution speed, the swaps, the spreads. It's all good. You want ECN? You got it. MT4, MT5, whatever you want, bruh. So what else? I think that's it. Thank you for your loyalty. Thank you for being here every day. Thank you for all your good questions. I know Master Trader has tons of questions. It's got to clarify. That's good. Well, I'm here. So ask questions. I'm happy to do that. What else? Yeah, interesting markets. Good. We like that. Right now, seasonality is working just as we'd expect, so that's also good, which I'm hoping sets me up for the rest of the year for the macro trends, so I don't mind the micro inside the macro. It's all good. If I'm a bull, I need red, man. I need red if I'm a bull. So red is great. What else? Oh, my swing trading group is meeting today at 2 p.m. Eastern time. So if you're in my swing trading group, we are going to cover next week and next month. Today. Next week, next month, today. I think it's going to be a quick one. I don't think we're going to do group work, but maybe. We'll see how I feel. So that's cool, and yeah, lots of interesting things going on. So without further ado, let's get on with it. Okay. Wayne, I trader only at Forex 1 minute chart profitable. I tried all other periods for a long time, but unfortunately it doesn't work. Is 1 minute chart wrong? No. I traded 1 year on a 1 minute chart. The only thing is you're not going to gain any wealth. You're going to work hard, and yeah. So my guess, if I had to bet, you will eventually blow up your trading account. But that probably goes without saying anyway. So I would turn this around. Okay, you're like, you can't be profitable on other periods except for the 1 minute. So why don't you focus on that? Like, why the hell not? I mean, clearly other people do. You don't. So let's just say if you trade profitably on a 1 minute chart, well, congratulations. That's good. You're very tactically focused, which is great. You probably have some good skills at identifying support and resistance. Awesome. That's really good. Okay. But now spend some time every day learning the other stuff. Okay. Because if you only trade on a 1 minute chart, you're making very small levels of pips. Normally, I mean, I don't know, maybe you make 100 pips per trade on a 1 minute chart. And then that's fine because, yeah, you're on a 1 minute chart, but you're swing trading or you're day trading, which is fine. But if you're scalping and you're only in the trades, let's say less than an hour, yeah, you know what? Focus on learning the stuff you don't know and accept that you're good at what you do know, but also accept that you should know more. Okay, so congratulations on being good on the 1 minute chart. It's a tough gig. To me, when I did that, when I traded on a 1 minute chart, it taught me how important it was to maintain focus on the longer term charts. So I did much, much, much better on a 1 minute chart if I knew where, let's say, dynamic levels of support and resistance were on a 4 hour chart. So then I could kick it off the 4 hour 21 on the 1 minute, and all of a sudden it, So I used to do this thing years ago where I would scalp 100 pips. I'm like, scalping's easy. I can scalp 100 pips at a time. And most people are like, 100 pips on a scalp? Usually you only make 8 or 10 or 12. 25 would be ridiculous on a scalp. I'm like, well, I'll just do it on 100. And of course, the trick to that was I would buy it off the 4 hour 21. But I wouldn't show the 4 hour. I just knew it because of multiple time frame analysis. So I'd say, oh, look, here we are at a 1 minute chart. And even though it's down, 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 I'm going to buy it over here as a scalp. And then all of a sudden it would start going up and up and up and up, and it would look amazing. Like, oh my God, how does he scalp 100? Well, dude, I'm just buying it off the 4 hour 21. So it reinforced how important the 4 hour 21 is, as an example. But then you enter your trades on a 1 minute, so you look at the 1 minute, but you're trading the 4 hour. So that's how I got that consistency out of that. Okay? So again, recognize you're good on a 1 minute chart, and then use that skill with better analysis, and I think your trading will improve. Okay? Okay. Cash says, with seasonality, aren't you looking long yen into March 26th? Well, here's what I'm thinking. Over the next 90 days, I will be starting the process of building a portfolio is the idea. Okay. Is that true, Master Trader? I have no idea. Canada has plenty of ridiculous laws. That could be one of them, but I have no idea. Okay. All right. But we got plenty of Canadians here that could maybe help you through that, or at least guide you. All right, so cool. So here we are. I'm just looking at Aussie yen. Did we do this, yesterday? So I was showing you the idea of the trend up, but the breach, the likely breach that we've been talking about, setting up off the top here, and how that you're looking for this is indicating has been up, but then we are predicting beyond that for, I think I said old man easing in a hot bath, right? Like predicting the reversal before it's even set up. And now we've gotten through this support, right? Maybe, still maybe, but the logic of what's going on here is if you're a bull, you actually want that to come down. And I think we had this as a plan A and a plan B. Okay, so that's cool. That's cool. So it's still coming down. Great, cool, right on. So maybe 78 is the first opportunity for advancement. I want it to come down so I can buy it. Okay. Where's my take on the WSB movement? Cool. Sounds like neat. Like I said at the beginning of yesterday's webinar, I don't want you trading this way. Okay. So, great. Other people are doing interesting things. Great. That's not what we do. We look at macroeconomics to create a fundamental bias. Then we use technical analysis to confirm or deny proper entries and risk management. So all this other stuff, short traders betting on a short and long traders betting against the short traders, and it's getting news, and it's on, like behind me are all these news stations that are all talking about it. Great, I'm not interested. It's fascinating, but to me, it's ridiculous. It's like worshiping a hedge fund manager because he made $1 billion in just 1 month. Yeah, but he lost $2 billion last year. So like, who cares, right? So it's very interesting, very newsworthy, totally boring, in my humble opinion. You might say, no, Wayne, it's exciting. These stocks went up 1,000% in 2 days. Well, yeah, but I'm not interested in that. I'm interested in very logical and intelligent, pre-planned moves based on the flow of money that is predictable. So yes, you might have the fastest boat in the world. You might have the biggest boat in the world. I have a raft called the Kontiki, and we follow the ocean currents. Boring, but steady and predictable. Okay? The other stuff, not interested. It's exciting to read, but not exciting to trade, because you'll find out that it's all an illusion anyways. So, cool. So, looking at this, we know the current is probably going to go like this at some point, or some form of that. Whether it's down here or down here, we don't know. But so far, so good. Okay. Okay, we had some up into resistance, some down. Be cool, maybe down here, 77.5, 78. And then if I can get that down there, especially if we do an OOP into a CT, then probably be long before NFP. Cool, nice, cool, right? So we got to watch this. So we'll have to pay attention. So even lower than the 79 would be great. Now we have to look at them. Are they all doing it, or is it just Aussie, right? So Aussie is starting. Euro, a little off. Okay, fine. Make sure the congruency on time frame. So 4 hour, 4 hour, 4 hour, 1 hour. No, 4 hour. Okay, so we could look at Kiwi, and much the same. And let's do a study like that. Okay, that's good. That's what I want. That's what I expected. Remember, we said down in the first week and down for maybe 6 weeks generally. So that's cool. That's cool. Bring it down. Bring it down. That's all right. Bring it down. Yeah. So again, down on this one, typically we would be buying it at 74. I'd like it to come down to 72.5 to 73. Maybe even further, but we'll have to see the world we live in at that point, right? So like we could be watching stuff like this. I need to mark this. Okay. You should probably mark this. Okay. So all these things are in place. So like I said, obviously a typical move, we would buy it off the 74. I'm hoping to buy it off the 72.5 to 72. And not even in January, or not even in February, I might even be talking March. So like one of the things we might discuss in the swing trading group today would be things like, how do you feel like this over the next 6 weeks? Down and up and down and up and down, and we're buying it closer to 70 the third week of March, for crying out loud. What's the most important? What day are we looking for? What did we discuss yesterday? What's our sort of time target for long-term entries? St. Patrick's Day. The 17th. Thank you. Now, you have to understand, we don't know nothing about nothing, so you can't sit there and say, I will do nothing until March 17th. Or even worse, you wait till March 17th because some guru on YouTube in a free video told you to do something. You have to understand how crazy that is. And then you just like, I'm going to start buying, and you put all your money in on March 17th. You're like, oh my God. All right. What do we know to be factually true? We know factually true that the Fed implements monetary policies that can directly impact investment decisions. Okay? Whether it's the stock market, whether it's the gold market, whether it's the real estate market, whether, whatever market, right? It's all going to be somewhat impacted by Fed decisions. We also know that there's things like the natural flow of money based on taxation. Or in other parts of the year, it's like things like when humans decide to take holidays. Even these things matter, right? So looking at all these things like, when is the Fed meeting? When are taxes due? Ballpark, we're going to focus on a random type of year. Not random, but a period, a particular period of the year. Just so happens there is a Fed meeting in there, so I'm using that to anchor it in your memory. It's just an anchor. It's not a crutch. Okay? It's not doing your job for you. I'm just throwing out there something you can remember. You're like, what day did he say? Oh, yeah, March, St. Patrick's Day. Well, you might remember St. Patrick's Day more than the Fed meeting in March. You're like, well, what day was that again? Okay. So you're like, okay, so maybe it's St. Patrick's Day. That's the most important day of the spring. Well, think of it this way. If you're a farmer and you say, I want to plant somewhere around March 17th. I want to plant my seeds. But before that, I need to till the field. But before that, I need the right kind of weather. What's the weather going to be like March 12th? What's the weather going to be like March 22? Well, we don't know. So now you have to adjust. You have to pay attention. You're like, oh, we're getting close to planting season. How's the weather? Is it looking like it's warming up? Is it time to till my field? Maybe by the 14th I need to till the field so that on the 17th, or maybe it's the 18th, or maybe it's the 22nd, or maybe it's the 28th. Maybe it's April 3rd. But somewhere along there, you have to say, okay, generally speaking, this is the right period for planting. I already got my field tilled and I'm ready to go. The weather seems pretty good, or you have to delay a little bit for the weather to improve. And then one day you put your finger to the wind and you're like, now. Okay? So I'm just reminding you that if you're a farmer in North America, spring is a pretty reasonable time to start planting seeds. When? What day, Wayne? What crop should I plant? Well, dude, you're the farmer. I don't know your land. I don't know you. I don't know what equipment you got. What are you going to plant? Corn, wheat, barley, flax, canola, aka rape seed. Have you ever seen a canola field? It's beautiful. Incredible. How about flax? A friend of mine caught himself on fire burning flax stalk. They peeled his whole back. You know when you burn your thumb and you get a big blister and eventually pop it and water comes out? You know that feeling? Then you can actually feel the air. He burned his whole back, and when he was in the hospital, they took a razor blade and they cut around the whole of his back and peeled it off in one sheet of skin. And you can imagine the tingling of the air. It had blistered. So the stalk of flax is so hard that it won't actually break down, even under the snow, under a Saskatchewan winter. You have to actually burn it. Yeah, all these things you have to know. Okay? So, I don't know what you want to do. I don't know what equipment is. I don't know where your land is. I don't know what kind of land it is. I don't know what, you're going to have corn or wheat. He told me it doesn't hurt. Okay, just again, like when you do that with a blister on your thumb because you burned it, it doesn't hurt. The burning part hurt. But he said he'll never forget the feeling of the tingling of his back as he could feel the air. Yeah, pretty amazing. Trinidad? Yeah, TTT. Good job, Barry. You know, I believe that was Castro's cigar. I think he liked the Trinidad. But I don't know. I don't know nothing. Okay, so we have a question here. Have we covered the indices? No, because I'm starting with the framework here. I'm framing the picture. All of this excitement that you're reading about is irrelevant. And all the reasons, oh, that's why the stock market's down. No, it's not. No, it's not. Oh, this? Oh, no, it's my Rolex. Sorry. This? Sorry, habit. Habit. Sorry about that. Here, I'll take it off. I'll put my other watch on. Yeah. You guys like watches? Some of you guys like watches. You like that one? Oh. You can't see it. Oh. Stupid lights in the way. Anyways. So it's me doing this while I'm talking. Horrible. Horrible. So this one doesn't have a spinning dial, but this one has all the major time zones. So how do I do it here backwards? You see this? Yeah, the light is too bad. You see this? I can change the time zones. You see that? That's cool. All mechanical. Beautiful, huh? If you like watches, it's beautiful. Yeah, my wife bought it for me for Christmas, but I designed it and they made it. So I went with, you see, it's got yellow gold with the stainless steel and black combo. It's really cool. It's not coming out well in the camera. Anyways, you see that? That's neat, huh? Cool. Anyways. Yeah, so I'm setting a framework here. Oh, no, I don't have this. No wonder I'm not wearing it. I think the band isn't set up properly. What's going on here? What do I do? All right, no watch. I'll do it later. All right. So I'm setting up the framework where it's so easy, and I know you're hearing it. There's all these reasons. Oh my God. Tesla and Apple are down because of in earnings. We saw things like sales are up, but profitability is down. And there's reasons. And there's these reasons like, why is the market going down even though the news is good? Oh, well, it's what they're doing to AMC, and it's what they're doing to GameStop, and that's what blah, 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 blah. Okay, 16 weeks ago, we said it'd come down right now. Dude, this is why, one of the parts how, I guess through my own maturity as a trader, I discovered that news isn't fundamentals. News are often data points inside your data set, which is part of your fundamental analysis. But then if you talked to me 10 years ago, or I guess that's not even long enough ago, 15 years ago, I was fascinated by this idea that my observations were things hit the exact right price and there was always a reason. And I'm like, it's really fascinating how some sort of news made this go up, but I had planned on buying that anyways. And then sure enough, just the right news occurred to make it happen. And all the TV people would say, oh, this, that, and the other thing. And I'm like, that is fascinating because this whole time I wanted to buy it. And then you hit here and then there would be news that would explain it. And I'm like, that is just remarkable because we were already on our way there. And then we hit there. And then something happens and it comes down and there was some reason presented that day. And I'm like, it's amazing how the news and price somehow always combined at the same place at the same time. Now, my immaturity was fascinated by how it always seemed to happen. And then as I matured, I realized, oh my God, all the news people are just simply wrong. It's just not quite true. Now, you could look at it and say, the more ice cream you eat, the hotter it gets outside, because we know on hot, sunny days, ice cream sales go up. And it's clearly because people are eating the ice cream. Clearly. And then you realize statistically when you take a stats class, you're like, wait, that's the tail wagging the dog. You could interpret it that way, but it's not physically possible. Right? So I realized news isn't news. News is volatility, but that was going to happen anyways. And yes, Apple made $100 billion this quarter, but Apple stocks are down and they're like, oh, well, it's this other reason. Well, that might be at least partially true, but isn't it weird that we could say 9 months, 3 weeks, and 4 days ago that it'll come down this time in this period? Now, which one is right? How could I possibly make such an amazing guess? Well, there's something there. There's something logical there, not related to the news. Now, where the news comes in is it helps it happen, but I'm sort of making an argument that it was going to happen anyways. And that was good that Apple made $100 billion in 3 months, but it came down because it's supposed to come down. Even that news couldn't keep it from rising because it was already overbought and it's supposed to come down. Okay? And it took me a while to get that, to realize I must separate the news completely and stay sort of news agnostic. Like, I know news is going to be there. I know it's going to help with the volatility. I know it's going to make every year slightly different from the next or the last. Like, you have to incorporate it. And then I realized, you know what? It's weather. Oh my gosh, it's like weather. A farmer will always try to plant at the same time of year. They're always going to try to harvest at the same time of year. It's not always the same day, and they'll have to plant earlier or late most years for different reasons. But then you can look on average, you'll be in the middle of both, earlier or late, and you'll say, oh, so based on what I see, maybe the March Fed meeting, the March Fed meeting could be a time where I might want to plant. Sometimes it's before, sometimes it's after, but that's when I got to be ready, willing, and able. And not thinking about like, oh my God, I should have tilled the field. No, you tilled the field before in anticipation of dropping seed. Okay? You can't be there like, okay, today's the day we're going to harvest. And they're like, harvest? You didn't even plant anything. I'm like, oh yeah, that's too bad. Okay? So that's what I'm saying, right, Master Trader? That farmers have this, we're farmers. We plant and we harvest. And every year the variables change, but we're still going to have the same intent. They are trend traders, Master Trader, and they're also commodity traders. Most farmers are very astute commodities traders, and they know how to use the futures market. Okay? There's not many uneducated farmers left in the world. They're young, they have biology degrees, and they're very good at hedging. Okay? Okay? I know farmers in Canada that own Caribbean islands. No joke. Not a timeshare, right? Not a timeshare. Not in a little apartment they share with 27 other families, right? No. They own the island. All right. Cool. So anyways, like I said, wouldn't it be cool? Would I like to buy Kiwi yen in March around 70 or 71? Oh, for sure. Theta says, would stochastic oscillator help with seasonality on time frame? No. So let me grab onto that. We're about to get a lesson. He's going to tell. I gotta look that up. I'm gonna get slapped for this one. YouTube.com. Holy Grail. Is it he's going to tell or she's going to tell? He's going to tell. And sure enough, there's one. So every time I say I'm going to tell you something, I think of this. Oh, sorry, ad. What is that? Oh, yeah.
Behold your humble servant, Sir Lancelot of Camelot. I'm come to take your own territory.
You got my note!
Well, I got a note.
You've come to rescue me!
Well, no, you see,
I knew someone would. I knew that somewhere out there, there must be.
This is what goes through my mind.
Stop.
Yeah, terrible childhood, huh?
Oh, you. Oh, your son. No, not you.
I'm Sir Lancelot, sir.
He's come to rescue me, Father.
Well, let's not jump to conclusions.
Did you kill all those guards?
Oh, yes. Sorry.
They cost £50 each.
Well, I'm awfully sorry. I really
Don't be
can't
afraid
say
of it,
anything.
Sir Lancelot. I've got a rope already. You killed 8 wedding guests and all.
Well, you see, the thing is, I thought your son was a lady.
I don't understand that. Hurry, Sir Lancelot. Hurry. Shut up. You only killed the bride's father, that's all.
Well, I really didn't mean to.
Didn't mean to. You put your sword right through his head.
Oh, dear. Is you all right?
You even kicked the bride in the chest. It's going to cost me a fortune.
Well, I can explain. I was in the forest, riding north from Camelot, when I got this note.
Camelot? Are you from
Oh man, it's going to take forever to get to this.
I'm an Irish officer.
Very nice castle, Camelot. Very good pig country.
Sorry, Patrick. Make sure you leave a note on the video recording.
I am ready.
I mean, to be so understanding.
Oh man. Anyways, it's going to go on. I've never seen that clip, so they don't get to the point. He's going to tell. Anyways, so one question is the oscillator. So we'll even do a daily oscillator. Let's clean this up because there's a lot going on here. So we'll get rid of this. 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 Okay, so now we only got some price. Great. Now let's zip in. And then let's insert custom stochastic. Oh, no, it's not custom. Oscillator, stochastic oscillator. 853, simple. That's how I like to set it up. And there we go. Okay, cool. Now I can make this slightly different too. Let's make it a little easier to see. Okay. All right. The question is, will this help in some way with seasonality? All right. First of all, it is lagging. So it's not going to predict before, like it's not going to predict seasonal change until the seasonal change has already happened. So that's not going to be helpful right off the bat. Okay? So I told you down here, let's say in September, that January was going to be down. So like what is this confirming? Maybe you could use it that way. Like, okay, Wayne was right. It's coming down, but is it too late now to be? So I don't know. But let's look at what it's actually doing. Let's do the math. Okay? Let me get rid of this. Let's do the math. And let me zoom in a little bit. Okay? What our friend the stochastics is doing is looking backwards. And it's saying, what was the prevailing trend? Was it up? Well, we know an uptrend is a series of higher highs, higher lows, right? Higher highs, higher lows, higher highs. So it's paying attention now to, did it make a lower low or a higher low? Did it make a higher high or not a higher high? Okay? So it's actually looking at this. What did this candle do relative to this candle? And what did this candle do relative to this candle? And what did this candle do relative to this candle? In fact, depending on the setup, it's saying, what is this candle doing relative to this candle and this candle and this candle? And it's asking, is it making higher highs? And is it making higher lows? And when it stops doing these things, that's when you see crossovers. So you could see that in this period here, right, just by doing the same math as the oscillator, you see it made a higher high, it made a higher low, okay, it made a higher high, and the oscillator should be rising. Now, when you stop making higher highs, but you're not making higher lows, what it does is it now starts to indicate that you're overbought, because it's telling you the market is struggling, in this case price. Price is struggling to make a higher high, but it is not yet bearish. Okay? So you could see that it'd be up and overbought, but not quite down yet. Okay? Now the Stokes is also going to pay attention to this as we keep trying. Yet another not higher high. Okay? So you're going to see somewhere in here, like now there's a bit of a low, and now there is a low relative to these candles. So this would be heading down now as an oscillator. Okay? Right? And this one's a little lower, and this one's a little lower. And then we try again, but then this one's lower than that one, and then, right? And then this one's lower than that one. So you know the oscillator is moving down. Okay? And obviously nothing is actually happening in price. We're just trying to find overbought and oversold. Okay? So now we get low, 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 suddenly a slight higher high, higher low, higher high, higher low, higher high, higher low, higher high. So we know it must be going up. So by looking at what the candles are doing now relative to the previous candles, you know it's going up. Then you know it's kind of coming down, then you know it's kind of going up, and then you know it's kind of coming down, and then we get here, and then we know it's turning up again, and turning up. And now you can see we've gone through 1, 2, 3, 4 candles without a higher high, so we know it's overbought. And if it makes a lower low, then it'll cross back down into the channel down below. Okay, so up here, overbought, second, right, fade, so we call this divergence, down, not almost oversold, but it did make the lower low here, so very close to oversold, and then back all the way up, and then it's sort of a down, and then back up, but now we're overbought because we can't make higher highs, but it's not bearish in the sell zone because we haven't made a lower low. Then you look back and you say, so let's take a look at the oscillator, and there we go. That's what I just described. Okay, this being the definition, this being the definition of overbought, and this is the definition of oversold. Okay, up, 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 failure to make a higher high, failure to make a higher high. It's now making lows relative to these ones. Okay, failure to make a higher high. Okay, down, but not making lower lows. So it's not oversold, but it is coming down. And then finally we get into here and a higher high, so it starts moving up, starts moving up, starts moving up. And then we get into here and we're struggling to make higher highs, and now here. And if we now get down here or here where we're making lows relative to the previous lows, then it'll be down in here what I call the trade zone. Okay, so does it predict, or can you use it for seasonality? Not really, because, you know, go back to like here we were in May, okay, and I told you this would happen in May. So I guess you'd have to look at it and say, are you going to use this to confirm? Maybe. Right? Would you use that to confirm the seasonality? Sort of, but that doesn't do the trade. Because remember, we were talking about it here. So if you were trading the seasonality, you'd be looking for this. So maybe use that as your weekly confirmation or something. Okay, but look at, here's the first week of the year, here, right? And we knew this was the sell. So it wouldn't have crossed by then because it would still be going up. Okay, all this is telling us here is that it's not, right, this cross, for example, is it's not making higher highs and it's starting to make higher lows. So, yeah, I mean, maybe as a confirmation, a level of confirmation that it's happened, but I don't know what time frame you want to do that on. Okay, but if you go to the daily now, okay, we knew our plan was somewhere in here it would turn bearish, okay, and that somewhere in here we knew there'd be a false rally, and then somewhere in here, because it's a false rally, we'd get a new downward move. None of that would have been confirmed here per se. So I don't think you would, and that was my general answer, right? So now that we've kind of explored it together, if you didn't see this coming, you wouldn't have traded it off of your stochastics because it would have been meaningless. Okay? But check it out, right? First week it's going to fall. It's going to fall for 2 weeks. Third week there's going to be a rally. Fourth week it's going to be down again. That's the oscillator would not have helped, especially if I told you to expect that type of price action in May, that this would happen the first week of January, the second week of January, the third week of January, the fourth week of January, right? Like, I don't think oscillator would help you, but my advice might have helped. Okay. That's cool though, right? Okay. And once again, if you guys are newer and you're not sure what I'm talking about or don't believe what I'm talking about, you can go to FX Street. So it's not even my house. You can go to the FX Street YouTube channel, find the interview that I did live from the Caribbean with FX Street. I think it's about an hour long. And it was the 18th or 20th. I think it was the 18th of December, 2018 or something? And I talk about it there where I'm long all the Japanese yen pairs. And I'm like, any day now, I'm about to take profit on everything. And by the first week of January, I'm going to sell all the yen pairs. And then in the third week, it's going to rally, but it's a false rally. And then it's going to come down even further. And even years ago, I'm talking about the exact same thing. And to me, it's like I have to come out and tell people, hey, dude, as a farmer, I like to plant my seeds in the spring. But before I plant the seeds, I'm going to have to till my field. And when I till my field will have to do with when the snow melts. Oh, was it 16? Thank you. December 19th, 2016. Okay? So it sounds like magic, but it's sort of like saying the ABCs. Okay? Okay? You're like, I can do it forward, I can do it backward. Right? Z, Y, X, W, V, U, T, S, R. Yeah, anyways. All right. So yeah. Very interesting. So I'm already thinking February, March, of course. But the thing is, I don't know, so I got to be RWA this whole time. So in this, let's say 8 to 9 week period, I'm sort of like setting up booby traps. David Earl says, will you buy in March or February? Yes. Okay. So that's the issue, right? I don't know. When are you going to plant? Wayne, when are you going to plant this year? The spring. And you're like, what day? Well, that depends. What's the weather like? So, yeah. So I just have to be ready, willing, and able. All right. So, yeah. So that's great. Let's do some commodities. Let's keep it moving. Okay, my oh my, WTI, it's moving up. That's aggressive. Wow, that's aggressive. Okay, I get it. But that's aggressive. Okay. Truth be told, I think this market is so aggressive now, especially with America going from this massive producer to oil to suddenly, not increasing infrastructure. That shifts the supply, or at least the future anticipated supply. It shifts the curve. Remember, it's not a price along the curve, but it shifts the entire curve to the left, which then would push up this price. And this has made us like crazy overbought, but overbought relative to past analysis. So I think the only way to play this is weekly swings. And you can see that these are just swing trades, right? These are just swing trades. That's it. There's nothing else to it. I don't know any other way to really be doing this because these numbers are still backward looking and not incorporating the new fundamentals. So, yeah, they're just swing trades. The thing is, it's expensive to swing. Excuse me. It's expensive to swing. So you're probably trying to day trade it into your swing zone, and probably finding that challenging because they're not really day trades, they're really swing trades. So if you're caught in between, I understand why, and it's just, I guess, the nature of the beast here, because we know what matters most is this is the monthly buy, and there's a weekly buy in here somewhere too, which I think is here, and the rest is just trying to do it. Just do what you got to do. Gold, I am a bull on. Okay. Okay. I'm a bull on gold. You know that. Okay. Not terribly complicated. So you want to pay attention to some of these things. Open up the indicator. Let's take this out. First of all, monthly. Okay. So you know we're in the monthly buy zone. You know that. Okay. Let me pull the conservative target as well as the aggressive. So I got a, oh, I do have it here. Okay. So let me change the time frame to incorporate it. So I would actually be looking for next month. So again, I would be looking for February, not what's happening today. Irrelevant. This is on the way to 2000. But again, we covered that a week or two ago, right? So once again, nothing has changed. XAU is on its way here. Okay. If you're a bull. Okay. Now, is it possible that there's another move down before the up? Yeah. That's why they invented stops. Okay. Bill Burns says, hey, what matters most is Biden policies are going to drive up gold and oil. Yes and no. First of all, I know it's difficult, but we have to separate ourselves politically and look at these things. Like, what does it mean? Now, first of all, yes, shutting down the Keystone Pipeline, at least on the short run, would have shown that oil a couple of weeks ago was undervalued, which I discussed in great length, right? So now if oil is going up, well, you should have done something a couple of weeks ago. And is it a Biden policy? Yeah, that is. But he hasn't actually detracted how much of oil is available by Americans. We're still producing what we're producing. So it was for some that had priced in Keystone, but look, Keystone was 10 years out anyways, right? So I wouldn't make it that big of a deal. But Biden's policy, an executive order specifically, would not have, I mean, it was the catalyst for sure. But ultimately, it doesn't make a big deal. The other one, like for gold, no, I don't think so. Remember, gold is supposed to go up for other reasons, and it has nothing to do with Biden. So that's that. Okay? So that's why you got to separate it. Like, why would gold go up? First of all, it'd be Fed policy, which is not Biden. And that policy was set before you even saw Biden sleep through a debate, right? But the other thing is it's foreign central banks devaluing their currency during these troubling times. So once again, gold going up is obvious, but it's not Biden. So, he's going to spend it. Yeah. It's not going to help to even think that way, Billy. I'm not saying you're wrong. I'm just saying it's not going to help to think that way as a currency trader because that's not going to put you in a good trade. I know what you're saying, okay? But it's not going to be helpful to you as an investor. So I'm not saying you're wrong, but I'm not saying you're right. That's all. Oh, but no, don't. I'm not also, Bill, I'm not slapping you down. I'm not saying you're wrong. I'm saying you're right. But as an investor, that is, hyperbole. It's an exaggerated truth, right? It's an exaggerated truth. It's not wrong, but it's exaggerated. And it could put you into very silly decision-making processes. And also, and this is why I say we kind of have to try to be apolitical, although it's difficult. We, as traders and investors in whatever market, it doesn't even matter whether you're Forex traders, commodity traders, futures, options traders, stock indice traders, real estate investors, our prime directive is always to see reality. And it's always a challenge because we have our inherent biases that filter out. Because as humans, we have to we see everything, and we have to very quickly say, what information is relevant to me right now? Is there a tiger in the grass, or is it just the wind? Like, we get really good at like what is important right now, not the direct, right? And like not. I mean, there's so many things that you can. All our senses are tingling when we're going through the universe, and we have to say which one matters. Okay, so it's very difficult for us to always see reality. Meaning, is gold going up or is gold going down? Is euro dollar going up? Is euro dollar going down? Like, very simple things. But we have shaped our interpretation, and it's very easy to believe something that's not actually happening, right? And I'm not saying you're saying that, but what I'm saying is you want to stay away from political rhetoric as much as possible because you might actually believe it. What we want to see is what is, and then try to interpret that inside of what our biases are. So if you believe Biden's going to spend us into inflation, right, and take us into the whatever, right? Like whatever the rhetoric is, then you still have to say, well, do I see that on my chart now? And if I believe it to be true in the future, how can I plan for that today? Is it happening? At what degree is it happening? At what degree is it changing? Right? And that's the more difficult part. So I have no problem, for example, if you are a trader or an investor and you're like, Biden's going to spend, I mean, dude, $2 more trillion is unnecessary in my opinion as an economist, but my opinion doesn't matter. All I know is if they spend it, it may influence money supply or consumption. Okay? And the challenge as an economist too is the consequence of the increase of money will impact various points of GDP in positive ways, but also impact the value of the currency, both directly and indirectly because of the increase of consumption. So for example, you might say more government spending leads to more money in the economy, the purchasing power of the dollar falls, but also if we're consuming more, we're buying more stuff from China, therefore the dollar will weaken even more because we're exporting our dollars and importing TVs and laptops, right? Or TV or South Korea or wherever, and the money flows that way, and it could have a double effect. What I'd rather you focus on is if it's happening, make logical investments. So if you throw down that idea that the dollar's weakened because of Biden, well, then follow that up more with an investment thesis than sort of the political side of the statement, right? And then follow that up with mini trade plans, follow that up with analysis, and try to pull the political part out and just say the dollar's going to weaken because of this, 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 and this. And, right, trade it. And you should be able to do that whether you love Biden or you hate Biden. And the most important part is that you see the reality of it and you make good investment decisions. Oh, the Messiah says, wait. Okay, let's get back to this. Bill is right, though you have to have your hand on the pulse of fundamentals as a trader. Yeah. You just said earlier that today doesn't matter. Well, okay, let's talk about that for a second. Today doesn't matter because you already planned it yesterday. So you've already carried out today's plan. That's why today doesn't matter. Because that's what we did yesterday. Okay? Okay, Messiah? So my point with that is a lot of people show up, open up their charts, and they start doing their analysis, figuring out what they're going to do today. Today, you did that yesterday. So that's the first part, right? So next month matters, right? Yes, next month, even the month after, I'm doing my analysis for that. So think about what I'm trying to get across with the message. We planned today, yesterday. I'm also planning next week, next month, and even, in fact, the month after that. So that's where I'm spending most of my time. Okay, Messiah? Once again, I'm talking to a group of traders that are generally new to trading, and they're always in the now. They're in the moment. So like the trader earlier today that only trades a 1 minute chart, I'm like, well, great. That's good. I'm glad you're very good tactically. But if we could add some strategy to what you're doing, I can tell you my own experience on the 1 minute chart over long periods of time, like a year I traded the 1 minute chart. I found it most helpful to have a solid understanding of what's happening on the longer term chart and carry it out. So almost every trade I make, whether it's a swing trade on a 4-hour chart, I'm usually pulling the trigger on a 1 minute chart or a 5 minute chart. So I always scalp. Every trade I make is a scalp. Okay? But based on these plans. So yes, I'm thinking March. Yes, I'm thinking February. Yes, I'm thinking next week. But I'm not necessarily thinking today because that's what we did yesterday. Okay? That's what I mean by that. So it might have sounded like two different things, but that's certainly not what I meant. Maybe I misspoke. And if I did, and if it was confusing, I apologize. Okay? All right. Gold. So yeah, gold is going to go up if you're a bull. Okay? There's resistance there. So we can find that the conservative target of 1986 just might be important. Okay? Is anyone here a bear on gold? Because the cool thing about these biases is they force you to make a decision. Well, if you're a bear, just put it in bearish mode. Bearish mode. Okay? Bears are taking this downtown. Okay? A bear is going to do this. Okay? Remember, I'm not talking January, I'm talking February. The conservative price down here for a bear is 1750. Okay? Michael says you scalp every trade because you want to make the best possible entry. So, that also seems like an exaggerated truth. I'm not trying to come across to say, oh, my trades are so good that I do this on a 1 minute chart so I can be perfect. No. No, because ultimately it doesn't matter, right? Like if you're trading the trend, if I'm 10 pips in earlier than you, it's still going to move in a trending fashion, right? So it's more like this. Let's say I'm a bear on gold, and I've analyzed that between now and next week, I want to be short gold around 1873. Okay? So I see this on a 4-hour chart. Now, as we approach the 4-hour chart, I can't use things like an oscillator crossover. I can't use a 5/8 cross down as a trigger because it'll take a day and a half to get that on a 4-hour chart, right? Right? I'd be so late that it's sloppy. So I make my decision on a high time frame. Okay? So like that might be a plan B. I could make this my plan A because obviously there's resistance there. So I could say, okay, right now I want to sell this around 1850. Okay? I'm at 1860 now, so I have permission to engage. So I move a little closer to the enemy. So I go from a 4 hour to a 1 hour. Or I can go to a 4 hour to a 15. Okay? And imagine this. I'm like, okay, I want to sell it. All right, well, I have permission to sell this. On a 4 hour chart, I believe this is bearish. So on a 15-minute chart, I'm in my price zone. And so now I'm waiting. I'm waiting to engage the enemy when I have an unfair advantage. Okay? So it's not that I'm trying to be perfect or so good. I've made the decision here. So now I need the tools to be helpful. Okay? So right now I'm just sort of dialing in the scope. So what if I said something like this? My plan here is to sell 60, right? 1860-ish or 1875-ish. Okay, so I got two possible entries as a bear. So now that I'm in that zone, I zoom in on the scope. And what if I waited now for a 5-8 cross down? Okay. Or, since you know how to use an oscillator like the stochastics, we can throw our bad boy Stokey on there and say, oh, well, I see something interesting here on a 5-minute. We got a 5-minute Stokes kiss, which means simply we're struggling over the last few candles to make a higher high, which is another way of saying over the last 15 minutes we have not made a higher high. Let me go back to the 4 hour and get rid of this just so it's not in your way. Okay, so we'll go back to here and say our Stokes is helping us see the candles. So I can look at the Stokes and draw the candles, or I can look at the candles and draw the Stokes. See, that's what I call training. I don't know if you've taken your technical analysis to that level, okay? But I've done training events with people. I remember I rented one of the penthouses in the Waldorf Astoria. And we had, in the hotel room, I had a dining room table for 12 people. And I had a bunch of traders meet me, and we traded all night. But one of the first things I did was I handed out blank charts. And I'm like, draw the oscillators. Now, I think actually I did the reverse. I gave them oscillators, but blank candles. Like the chart was blank. All you had was this. And this part was blank. And I said, draw the candles. And I had people reverse engineer it. If I gave them the Stokes, you should be able to draw the candles. And vice versa. So I think it's helpful to understand the math. So now you don't do something unless you understand what's happening. And the algorithms, and that's all these things are tools for understanding statistically what's happening, right? So anyway, so now I can sit and I could do something very, very basic. I could say, okay, I'm following my rules of engagement. I want to sell this for whatever reason. I'm at the right price. It just might work. The time of the day is okay. The stock market open. Okay, great. So I can wait, for example, on a 5-minute chart for the 5-8 to cross down. I don't need the 2155 because, in my opinion, on a 5-minute chart, there is no market. What do you mean market? No one's making market decisions on a 5-minute chart. And what about the long-term trend? Dude, it's a 5-minute chart. There's no trend. There's no fair market value on a 5-minute. This is all tactically price driven, right? So now all I care about is price. And the two tools I use to measure price is the 5A cross or the stochastics. So I could just sit here and wait for both of these or one of these to cross down. So remember, it's not the kiss that matters on an oscillator. It's dropping below the overbought. Because if it's no longer overbought and the oscillator's dropping, we know technically over the last few candles, A, we're not making higher highs, and B, we are making lower lows. Oh my gosh, that's a 5-minute move, right? So that tells me technically it has already happened, but I might not like that because it might be lagging. So now I have to wait here, but once again, for this to cross, it might take me a half an hour. So now I can look at it and I can anticipate and I can say, ooh, they're right. So now you would also see the separation, the angle and separation between the two moving averages are now converging. Very similar to a MACD. So now you know that we're getting a MACD change, a MACD cross down to the waterline. So I can draw the MACD for you. Okay? So you might say, well, I already see it. It's already happening, Wayne. Well, I'm like, well, on your 5-minute chart, you're probably going to have to wait another half hour. Half hour? I can't wait a half hour. Well, then drop into your 1-minute chart and make a decision. Okay? And you'll see now, going to the oscillator, what the oscillator was doing. And you can see, first of all, we got the divergence, but notice the trade back into the trade zone. So maybe this information was helpful to you earlier. I proposed to you, by the way, if you had no idea it was going to fall here, then that's your problem. Your oscillator, not going to help you. Your moving averages, not going to help you. Elliott wave, CCI, whatever. If you don't know it's going to fall there, then all these tools are worthless. And notice that I'm not telling you to rely on the oscillator or the moving average. I'm teaching you what they're telling you statistically. They're not means to a trade. They're just tools. Okay? So, if you felt like it was going to fall there and you are on a 1-minute chart and you know how to do your analysis, dude, you can just pull the trigger on that all day. By the way, how many pips are you going to risk? 20? 30? We also know there's another one at 75. So this could be a scalp. You might be risking 15 pips on this or less. Or you can have 100 pips on this and get both the 60 entry and the 75 entry because it's incorporated in the same stop. Yes, spread is determined by the market, guys. So if the spreads are high, it's because there's no buyers or sellers anywhere near where you are. Okay, that's the market. So anyways, how many people felt that this discussion of oscillator and drilling down from a 4-hour to a 1-hour was helpful? Could I be so bold as to ask you to click the like button? There's only 80 likes, 200 people watching. Cool. Was it? Anyways, we'll leave it there. We'll leave it there. What would you like me to cover next? What are the settings for the oscillators? I got an easy fix for that. YouTube.com/FXBootcamp. Playlists. Free Forex trading course. I gotta go. It's backwards for some reason.
Action
Here you go.
and market
This will take you
action
through
is
all the
really,
setups
really
and
important.
settings, how to use moving averages, how to use oscillators, how to use
Between
moving
market action, the
not
overall
just
market
moving averages,
forces, let's say,
oscillators,
of the day,
pivot
and
points,
then
I
we're going to
think, and
look
something
at
else.
price
So it's
action,
2 or 3
which
hours
is
worth
what's
of
happening in
lecture.
the moment. So they're looking at the same
Oh, look at that.
price and time data, but at two
does that
different
even work anymore?
points of view. And I'll show you,
better
if you can
update that.
line them up, you have a better chance of success.
Okay, somewhere in there. Oh, there it
Now,
is.
Before we go any
Okay. So you'll have to go there. Click the link. And by the way, leave a comment. Click the like button. Don't be a lurker. See ya, Alejandro. Cool. Master Trader says, can you explain the 80-20 rule? I don't feel like doing it today. Mostly because I don't do a very good job of it. I think I leave people more in wonder than, so I just don't. I'm tired, man. I'm not ready for, I can talk about oscillators all day. That one is a trickier one for some reason. All right. All right. So we did some commodities. We did a couple of yens. Should we do the exotics? Here's the USD ZAR. Coulda, shoulda, woulda. I think I'm going to do the next one. So now I'll readjust my trade plan and do this. Okay. I didn't want to take it off the top. I don't want to be the first one in. All this kind of stuff. So let me readjust. I think something like that would be pretty cool. Okay. Kick it over here, baby pop. I'll even, I'll make it this way. Okay. I think I got, not, yeah, I'm out of peso. I did trade it and I did take a loss. And we knew it was too early. So once again, it's just too early for the repatriation flow. This one I'm still in. So let's drill in now to a 5-minute chart. And so here's my plan. Let me get that out of the way. So right now we have a 618 in control, which means a 1382 is the target. 1382 is currently 17.5. So I'm still doing it. Nothing's changed. I'm still in the trade. And that's that. Okay. Remember, this is a financier trade. I am simply lending South Africa euro. I know I'm early in the trade. You also have to realize, let me remind you. Let's go back 3 or 4 weeks. What I said is I expect the euro to be weak in the first quarter. So January, February, March-ish. Okay? So I am long-term long euro, just not medium-term long. So I have some seasonality play built into this. The second part is I'm bullish based on macroeconomic growth and rotation, sector rotation. In this case, macro sector rotation towards exotics. So I am long-term long rand and I'm short-term short euro. So over the next 6 months, I expect sideways, some down and then some sideways and all of this. So literally this is a carry trade where I don't expect anything out of this pip-wise, although I was up 400 pips. But I am collecting a good carry. And so ultimately sideways is good for a carry trade because you never kind of get scared out of it. And I'm also trying to use this as an example where I know short term this is okay, but medium term it's mediocre, and long term it's intentionally not the most best. It's not the best trade relative strength wise based on my macro analysis, but ultimately I took the shot because I had the shot. Okay. What are my fib settings? 21, all right, 382, 50%, 618, 786. All very typical fibs. Neil, why don't you take all my courses? I've never read a book on Forex. So why don't you just watch take the video courses that I've developed over the last 10 years and just skip the whole reading part and get going. Okay? But honestly, I don't know what book you should be reading for learning how to trade Forex. Okay? Can we do Bitcoin? Biddy? Yeah, I can go back to Biddy. Biddy, can't you see? All right, you tell me. Tell me what to do. Am I a bull or a bear? Remember, trading is pretty straightforward. Technical analysis is pretty straightforward. The way that you earn value is deciding whether you're a bull or a bear. If you can do that, you can do anything. So if you paid me, I was your man, you paid me. You're like, Wayne, I want you to buy. Okay, good. You're like, Wayne, I'm going to pay you money to buy Bitcoin for me. I can do that all day long. Okay? Whether you're right or wrong will determine how much money I can produce. Okay? Great. So first thing I need to do is change this to bullish. So let's start with position trading bullish bias. So I am a bull. I only look at this from a bullish point of view. I'm a price zone. I wanted to buy. I would buy this around 30,000. Okay. Now the first touch, which we had, what was it, a week ago? I don't like first touches. A double bottom on 30 was definitely buyable yesterday. So if I was your manager, I would have bought that. One of these moves in here, I would have been long and strong. Good. Now, I also see that my long-term buy zone, I'm in it now. So I have permission to engage. And in fact, this is a front run. And the best kind, a double bottom. So I don't know if you're right on Bitcoin. I don't know. I don't even care. You pay me to buy it, I will buy it for you. I will buy it good for you. But you might be wrong. I don't care. Okay? In this case, I mow lawns. I'm not a landscape architect. You get it? Like, I'm not here to say, I don't like your landscaping. I just mow and blow. So you're like, buy Bitcoin. Okay. Okay. And I'm very good at it, though. Okay, great. So I have permission to engage. I would have taken the double bottom as a front run, long at 30. Great. So what about next week? Well, let's do swing trading bullish bias. Okay? And you can see we're a little low on this week, but we're not trading this week. Remember, there was no permission to engage until we got into here. Double bottom, psych level at February's buy zone. Okay, great. So next week is still mediocre, which means the market hasn't quite believed it yet, which means there are still bears in this market. We know that. For example, I can measure it statistically. There are still bears there. You can use oscillators to tell you there's still bears there, right? Little things like we haven't made a higher high here, and we haven't had a higher high here. So between where we are now and 35, we're tiptoeing through a landmine field. But I can do it. Okay? Great. So the first one is here. What are we going to do next week? Well, I can try to kick it over here. Kick it over here, baby pop. Right? So if I had an opportunity like this next week, I'd probably take it. And next week's target is here. But I know we're not going to hit that because we got to get through this area first. And those bears are still there, and they're not going to give that up easy. I also know that dollar's not going to get weak for a while. It'll have fits and spurts, but I think it's too early to be net short here. So I think you're going to be challenged pretty hardcore at this level. Okay, starting with this one, but definitely this one. Because really, bears don't want you to be up here. This poses a problem as a bear, because then we got to play it like a range. Nobody wants a range. You don't want a range. They don't want a range. So they're going to sell this at 33.33. And you're just getting long at 31.50. So there's going to be a war here next week. You get that? And it might not be a war you can win, but that's why you got to have stop losses. So our stops are going to be below here, okay? And we got to pray that we get a good setup and we get follow through. And you might want to, if you're worried about the loss, when you get into here, we might want to move it. So now let's look into tomorrow's trade. So now we got to go day trading bullish bias, okay? And we are worried about this, okay? Right? So let's remark all of this. We're worried about here specifically. And now let me just double check I got that right. And yeah, there's another one higher up even. So we'll mark this. And yeah. So the best you can really hope for is that something really happens nice and we get this follow through. Okay, let me update. Okay, there we go. So, right, this is a Friday front run. And what it feels to me is we're going to be high on Monday here. So you should be on Monday straight already. And Monday is going to open cold. I think it'll be a cold open. And I'm not sure if we'll get to here, but that would be sort of Monday's plan for Tuesday. Okay? Remember, bears don't want you to breach this. Because if that happens, then you're going to here, and that means they're not going to get a lower low. All these bears that are here want a lower low. You have to understand that. Okay? And so they're looking at this as their sell entry. Can you guys see that? This is the sell entry. You're like, Wayne, how do you know that? How do you know that? Well, look at the math. First of all, that's there, but let me do the math for you. Ready? Let me change this to a day trading setup for a bear. This is a bearish bias day trade, and you can see we're in their sell zone. Okay? So a bear is thinking about this. And they certainly don't want you up here because now that means either a range or a break. So if they're going to sell, they're going to sell now. That's why I think if bulls get it, we'll get a high rally, we'll open out of position, we'll open at the target, we'll be out of position into a daily counter trend, and that's what the cold open would mean. Okay? So now you have to say, well, what if it took you 3 or 4 days to get the up going? Well, that's okay because we're in the monthly buy zone. So if it doesn't happen in one day, you don't give up. You understand? But I'm also telling you, based on now analysis of not Bitcoin, but just simply the dollar. I think the dollar can weaken from time to time, but you might be early, okay? You might be early. So I'll probably be more serious about Bitcoin in the next 6 to 9 weeks. I wouldn't be shocked to have some more dollar strength, but ultimately I don't know. So if Ann is paying me, Ann says, Wayne, be a buyer. Okay, well, I'm starting here. And if there's a higher high, I'll probably try to buy some higher lows. Okay, and I can do that all day long. The trick isn't the buying part. That's the easiest part. The risk management is the most difficult. Because now you have to incorporate, like, let's say on Monday there's a dip and you actually get a buy down here at 31. And I can see it's a buy zone. It's not on the chart, but I can see it is. So if I get something like this on Monday, do I buy it? Yes. Do I put my stop based on a daily? Do I put my stop based on a weekly? Or do I put my stop based on the monthly? Which one is right? Wow, gee whiz. Do I have 1 trade? Do I have 5 trades? Do I have 50 trades? Like, there's a lot that can go into that, and that gets tricky. And then, of course, when do you move? Do you move when you're challenging here? Do you move when you're challenging there? Well, I don't know. I mean, I'm going to have to make decisions. It's part of the fog of war. Okay? But the entries are, I mean, gee whiz. Think about it. If you're a bull, you only buy low at support when it's trending up. That's not complicated. Okay? That's not complicated. How can that be complicated? Is it trending up right now? You make a decision. Great. Are we buying a low? Which means you can't be buying low unless there's a high. Higher low, not lower low. So you have to have an up. So you have to have uptrend. There has to be green candles, but you're buying red after a green candle. And for whatever reason you identify, psychological level, price action, right? Market, right? So we have price and we have market. So for example, with price, it could be a psychological level. With market, it's a central pivot point. Good. Well, that's support. So you're buying red candles at support after giant green candles in an uptrend. And then you drop into a 1-minute chart or a 5-minute chart and take a 5A cross in an uptrend, buying low at support. That's not complicated. And now it'll take practice, but you know, I think you believe, okay, that if that's the only thing you did as a bull, you would make money. And you're like, well, what if I don't have that today? Then don't lose money. Okay? Patience and discipline. But when you are right, fire for effect. When you're right, I want you to be very, very, very right. And when you're not right, you're not trading. Or you're trading very little. Okay? Okay? Solano Cub says, hey, have we been playing the latest stimulus? To me, it's all the same. And by the way, we don't have a stimulus. We don't have a latest stimulus. We have people talking about it. Okay? And I've predicted that they're going to talk about it for quite some time. So don't worry about all that. Okay? Like, don't lose sight of what I've already told you is the most important thing. One day, back in April or May of last year, we were listening to Jay Powell, and he said one thing, and I said, that is it. That's the thing I've been looking for. That's my reason. I am no longer a dollar bull. I am a dollar bear, and I expect to be a dollar bear for the next 5 years. Everything else, generally speaking, is almost irrelevant. Who cares about everything else? Oh, the extra stimulus, and oh, it's going to do this, or oh, it's going to do that, or this guy said this and that thing, and oh, did you see what happened to this stock? And did you, oh, look at what happened to... All that stuff is happening, and it is newsworthy. But it will not change my investment thesis. Right? It creates volatility. Oh, for show. But it doesn't dictate my investment thesis. So rhetoric certainly doesn't do it. Okay? So I am free. I am liberated. Right? Right? I am liberated from that noise. Notice that my screens are muted behind me. Okay? So I've made my decision, and that is that. And there will be periods of time in which I'm very, very right. There will be periods of time where I'm very, very wrong. My job is to understand what the charts are telling me. Are these market conditions favorable for my investment thesis? If the answer is no, then I have to back the truck up and wait for my turn. What was the one thing? Jay Powell said he will not do negative interest rates. And you're like, well, what's the big deal with that? It is a change in policy. And in the context, the change is what matters. Okay? It puts a floor, in this case, which says no more negative interest rates. There is no need now for people to front run the Fed. By the way, when that happened, the yield on the 10-year T-note was less than 0.4. Okay? Less than 0.4. And it's over 1. So, by the end of January, interest rates had gone up 300% since that one statement. And I understand the mechanics of money. It's not a bet. It's not like a guess. It's simply the mechanics of money. And of course, I explained everything in great detail over many, many weeks. Now it's old news, but it changes the mechanics, literally the behavior of market participants. So that put the end of that. And from that moment on, interest rates went up, which means the dollar got weak. It's the same thing. And back then I was talking about Newtonian physics, how this all works together. Okay? Okay? So that's that. The only thing that can change my mind is we get in a situation where the Fed has to go negative. I just don't see that happening. Now, of course, COVID-21 could do it, but I'm not there yet. I don't see that yet. Again, I'm looking for reality. So going back to where I said we try to need to be apolitical as traders, like we don't want to say, oh, I hate Trump so much. Trump is going to ruin everything, and therefore I'm going to make these trades. Or that Biden is so bad, he's going to ruin everything. Or Biden's going to save us. No, look at what the fiscal policies are. Put that into your fundamental analysis of the flow of money globally. It doesn't actually change things that much. So you can say, well, if G goes up, C goes up. If C goes up, right, then XM falls. And if XM falls, USD falls, and then you carry that action. But you might also want to buy South Korean companies in the stock market. You might also want to buy Bitcoin or gold. And then if that money is flowing to Asia, you might want to buy some energy. Now, you can break that down and say, okay, well, that's a thesis on energy now. Should you be buying oil? Well, I don't know. Why don't you do some analysis? What is the supply? If you think demand is going up, what is supply doing? Now you do your thesis, right? Or should you buy the South Korean won as you flow, as the money flows there? Well, if the money doesn't flow there, then you made a bad decision. If it flows to China, and China, let's say, factory capacity and utilization figures go up, could you possibly say that that is a marker for potential increase in demand for iron ore and coal from Australia? Therefore, you should be buying Aussie dollar, front-running the future demand for Aussie dollar based on the future demand for iron ore and coal, based on the future demand for steel, based on the future demand for stuff made out of steel in the Chinese economy. And maybe that's because they need to build skyscrapers or build more bridges because all these orders means the supply chain, or maybe they're making more cars, or maybe they're making more laptops and they need steel and aluminum and copper and silica. Or silicon. And you're like, well, what goes into that? And all of a sudden you're tracking this based on logic. And meanwhile, on your free time, you can hate Biden up the yin yang. But it doesn't translate into good trading. Okay? If you don't like him, make a boatload of money and fund a super PAC. Ultimately, I don't think it really matters that much. Like I said, no matter what happens, even if you hate Trump, we knew how to make money under a Trump administration, and that's what matters. You could love Biden. Great. Things will change. Great. We will analyze it, in particular from a not just a closed economy. That's easy. You have to do exports minus imports, right? So now you do an open economy analysis and look at trade and then make decisions. You can make a bunch of money and you'll be fine, mostly because you're logical. I want you to make intelligent, informed investment decisions based on reality. Now, you can have your filters so you can make decisions like, Biden is horrible, so I'm going to short the dollar because it's the end of the world. Well, when I hear that, this is really funny. Because if you knew anything about trading and you thought Biden was going to be the worst president, he's going to spend money up the yin yang, he's going to kill the U.S. economy, so sell the dollar. The funniest thing is you're going to make money, but you're totally, completely backwards. You have no idea what the hell you're talking about when it comes to currencies, because if you thought that, you'd be buying the dollar, not selling it, which is really funny, right? So you're like, Biden's going to ruin everything, so I'm going to sell the dollar. But the funny thing is selling the dollar means positive global macroeconomic growth, but you don't get that, and the whole thing is funny because you're doing the opposite of what you should be doing, but you're making money and you think you're right. which is great, right? You're like, which is even better, making money when you're wrong, believing you're right. And ultimately, you are right because you were wrong. And I love the paradox, right? So it's all about how do we make money? How do we make money? I'm an entrepreneur, okay? It's all about creating value, okay? It's all about creating value. What kind of value can we create? Political opinions don't create value, but they do sell ads on TV and the radio and in newspapers, right? It's interesting. Like, it's really, truly interesting. The discussion and the debate about how society should be run, it's wonderfully interesting. And we have many different points of view. And from that, you can have many different tweaks and hacks to economic models that produce some sort of positive effect, because no matter what you're trying to do, whether, let's say, you're Republican or Democrat, Republicans want low taxes and a small government, and that's going to have a positive effect on the economy. But then the Democrats want bigger government and more redistribution of income and stuff, which is also actually a positive, right? Like, and one of the greatest things about America is after 4 years or 8 years, you're like, it's too much. It's too much. We've gone too far one way. So you get rid of the Republican and you put in a Democrat. And then all of a sudden, oh, there's too much. It's just too much. And so then you go back to the Republicans. But that's good. Okay? That's a good thing. That's a positive out of America. Okay? So we need to be flexible and say, okay, if Biden spends another $2 trillion, G goes up, C goes up, M goes up, how do I make money? And of course, if I just said a bunch of things, you're like, what the hell is he talking about? What are all these letters? You need to join FX Bootcamp. Okay? Michael says taxes will change, so therefore blah, 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 blah. Well, you put that in. How does that going to affect consumption? Okay? For example. Neil, it's less than $10,000 a year. So you can go to fxbootcamp.com and use the coupon code for 76.4% discount. You'll find out it's tiny. It's tiny. On this account, I only have the ZAR trade. So I have 200, well, including my yield. So I'm up 185 pips kind of. I have 100. So I'm just shy of a 10% return based on my income. And then, of course, I'm just shy, I'm 180%, no, 150% return on asset appreciation. That one is from last week. Okay. So, Sekiai, 1, 2, 3. This channel isn't about me putting on a bunch of trades, showing you, like me making trading decisions. You follow along. Rah. I'm teaching you to make decisions. And so some of these, when I take trades, I'm showing you examples. So I shorted USD Mexican peso yesterday. The day before and the day before that, and even yesterday, I said, I think I'm too early. I take a shot, and sure enough, I'm too early. But hopefully you take that and say, well, that's a great lesson. It was set up technically, But there was something else that's Wayne was saying, that this is a remittance trade, and that we were actually too early based on the calendar. So I want you to say, oh my God, it was set up technically, but what is this remittance thing, and how did he know it was too early? And so I set up a trade, took a loss. But now you know, well, maybe that too early part was important to the trade setup. And you're like, well, what was that? How did he know it was too early if it was set up perfectly on a technical level, right? Or this other one, it had to do with it's not on this one. The czar trade to me isn't that I'm short and collecting carry, that I explained how I'm mixing seasonality, which is medium term, with long-term fundamentals, which tell me mediocrity. Now think of the complexity of me taking that trade and showing you that setup. I'm definitely not doing it to show you that that's the right trade. In fact, I'm telling you it's not the best trade, but for all these very complicated reasons. Because I know there are other people that are trading euros, rand religiously. Not religiously, but emphatically. I mean, they're extremely focused, because we were doing that a year ago or 2 years ago, and I'm saying, well, that's not the trade anymore. But the one I do like better isn't trading yet for the same reasons, seasonality combined with fundamentals. Okay, but I am looking over there. So I'm putting like 5 or 6 or 7 layers of a complexity on top of that, and I'm trying to show you the nuances of making the better decisions. So I take one telling you it's going to be mediocre. It'll perform well in the short run, but generally speaking, it's mediocre, but it will produce. And that I'm waiting for the better one, but it's weeks, maybe even months too early. But I got my eye on that prize, and I'm setting that up, not based on what I see today, but on what I expect in the near future. Now, you can take all that. Now, you got to put together your own thought process, your own trade plans, and set everything up and do the job. Okay? I don't see it as my job to come in here and wow you with all my trades and everybody screaming, yay, and you follow on, and we do all this stuff. There's lots of Bitcoin guys that do that. They have thousands of people watching. I'm actually trying to make you a better trader. Okay? So maybe I'm not as exciting. I don't preach get rich quick. I don't scream like, I just made $1,000. Woo! Look at this. I just made $1,000 trading Forex. It was that easy. Boom. Right? No. But I do want you to create value. And I do want you to stay small, stay humble, focus on the long term. Okay? And there's our 5-minute scalp, by the way. There's your 5-minute scalp, and it's happening right on time. So very good. Okay? Very good. Remember, short at 1860 or short at 1875. We set this up on high time frames, drill down on low time frames, and all it is, it's a pissy little scalp with a long-term point of view. Easy peasy, lemon squeezy. How long have you been running this group? I've been doing YouTube videos for 15 years and coaching for 20. Okay? Cool. Yeah, that's insane. Yeah. Totally insane. Boo, 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 boo. So cool. So for those in my swing trading group, I will see you at 2 p.m. today. We will do next week and next month planning. I don't expect to go into deep group work, because some of the meetings have been going on for 3 hours. And I mean, I'm not upset by that. Like, we have very good discussions. Our swing trading group meetings are, it's the best part of the week, really, honestly. I love having these deep, intense conversations and feedback, and they're really emotional for me, by the way. Like, when I'm done, I'm spent. Like, emotionally, I'm a wreck after these meetings. But it's such a joy. I'm just like, I look like I was run over by a freight train when they're done, and I'm not joking. But they're so good. I don't think that's going to happen today. I think it's going to be quick and dirty. We'll just knock out our trade plans. I bought a car a couple of weeks ago, 3 weeks ago now, two and a half weeks ago, and sure as shit, it's going to show up today somewhere between noon and 4, and you know it's going to happen right in the middle of our webinar, right? Like, the truck is going to show up, big semi truck full of Ferraris and stuff, and like, I gotta be there. I mean, I gotta check it out. I gotta sign the paperwork and all that kind of stuff. So you know it's only going to happen in the middle of that meeting. So I got to be flexible enough where we'll just knock it out. I can't be in the middle of group work and all of a sudden this guy shows up, right? So, not yet, Shungi, but I have to look into that. So, right now it says disobedient on the front. So anyways, when that shows up, I'm going to have to go, and I apologize. Like, I put you in, you're more important to me than that, but I have to like be there and sign for it and all that kind of stuff. I bought a little family car, I guess sort of a man minivan. It's called a Porsche Cayenne GTS. Completely custom, of course. Because, it's got nice back seats, and it has more towing capacity than a Ford F-150. So I want to do some yard work and pull a trailer and stuff. So, it's sort of a man minivan. Yeah, so that's the thing. Junkie, do you have I was going to Google that today, in fact. Does anyone know like a checklist of things that I should go through when it's been years since I've had a car delivered. I haven't had a car in years, so it's kind of funny, but it's been a while. I remember I bought a $20,000 golf cart many years ago, and it was delivered. And I didn't tell my wife because it was a gift. And the truck shows up, and she's like, "What's this huge truck in front of our house?" I'm like, "Oh, that's your gift." So anyways, the back door opens, and he drives out a Ferrari, and then he drives out a Bentley, and he drives out all these cars. And she's like, "What did you buy me?" And then it pulls out, and like, boom, a golf cart, which was pretty funny. And because they couldn't put it on a regular truck, they had to put it in an inside truck. So anyways, I thought that was pretty funny. But yeah, so does anyone have a list? Like, where do you go for that? Like, what should when they pull it off, just walk around it and check? Yeah, and that's easy. I used to hear stories though, like, in like the 1960s, Hertz decided to buy a bunch of Mustang GTs, right? With the V8s in them, and rent them. So people used to rent them, take them home, and take the 8-cylinder engine out and put in like a 6-cylinder or 4-cylinder into the GT. They pull the engine out, put the new one. Like, what if somebody swapped the the V8 out of this thing, right? I don't know. It's just like, what detail should I look at, right? Yeah. I just thought there might be a helpful more. I mean, I guess that's all that it is, right? But yeah, get both sets. Yeah, to replace a fob. Yeah, I don't expect a big deal. Boom, 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 boom. What's up, Master Trader? Thanks, Marina. Am I designing it? Well, we've done 2 weeks of it now, and the third week I plan on attempting. I'm writing up the notes now. I'm attempting to give you an entire college course of Economics 101 in an hour. So I think that's going to be pretty crazy, where I say, 3, 2, 1, economics is the study of scarcity. Boom. And I go, and we're doing possibility frontier curves and all this kind of stuff. And I mean, there's so much that has to go into like why are we comparing GDP of 2 different countries, and why is it important? And well, you have to understand that, for example, trade makes everybody better off. I mean, I have to prove that just to get the basic concepts of like trading and investing. So before I break down GDP, I've been focusing on like, why is it even important? Like, who even cares? And the next thing, the bigger conversations down the road, I think are I realize that if you knew nothing about economics, I'm sort of just skimming the surface, but there's a lot of things that are sort of pre-built into the models that it would be helpful if you just at least knew, just like somehow had the greater sense of how much goes into these numbers. So that's why I thought I'd do a 16-week course in 1 hour. so that you just understand that there's deep meaning into some of these before we go into them. Oh, well, I send out emails. It's at 2 p.m. Tuesdays in the War Room. Master Trader, I was looking at your question about like February and then July and August and all that. I'm thinking more generally than that. Even though I give you a lot of Hail Mary predictions, I'm doing that just to keep your attention. But I try to think more generally than that. Right there. So there's a time to plant, there's a time to harvest. And I try to keep it fluid and flexible in between because I don't like saying, even though I say it, I don't like saying like January is going to fall. I do that because I get your attention. Maybe I'll have an opportunity to teach you bigger, right? Bigger. I mean, that's sort of the attention grabber, the hook. And then I have an opportunity to teach you sort of more important things. So I don't like saying ahead of time, like, for example, well, in July we'll be doing this, in August we'll be doing that. Those are general frameworks, right? But I like to have some sort of, I guess, let me try to attack it from a different angle. I think Elliott wave is correct. I've never studied it, but I know enough that it's probably correct. But I don't trade Elliott wave because it's too nuanced. And again, I don't know because I'm not trained, so maybe I got this wrong. But I just don't like the idea of saying this is a 3 wave, it's going to expand, and then the next 5 wave, it's not going to. And I get that, but I like to leave it for my interpretation in that moment. I don't like the rules. So as a general framework, there are times when I'm much more of a buyer in the market. But I could have 9-week windows where I can then refine that decision more closely. And I don't want to say in July one thing is going to happen versus another. Let's kind of be prepared in July and understand what's happening, and maybe there's something important happening in July or not happening in July. And I point things out like dates, like the Fed meeting in March, the Fed meeting in January. Do you think, by the way, the Fed meeting in January, right around the 3rd week, is what creates a false rally? Well, yeah. So is it the false rally or is it the Fed meeting? And in the one in March, and I'm using that as a key anchor for our discussion, maybe that's what's important. And there's one in June, and I use that as an anchor. But remember, I'm doing these as neuro-linguistic programming hacks. If I can get you to grab on to that thought, if you remember it, you're like, oh my God, he said the June Fed meeting is important, and he's, and I do something that helps you remember it, then it's a mental hack. And I programmed your brain. And whether it's true or not is actually irrelevant because now you have this anchor and then now you can have interpretation. What I don't want is you do something because of something. Meaning like you only, after the Fed meeting you sell. No. All I'm anchoring is the Fed meeting's important. Okay? Okay. So again, what I'm going to do in July, I don't know. Typically neutral. but let's see what's important when we get there, okay? So there's a fine line between predicting and being ready versus blindly doing something, right? So anyways. Yeah, GameStop's up to 400. Cool. Hope they take profit. We have a question about, I made a certain amount of money. Is that good? Well, if you make 2% a month, you're the greatest professional Forex trader in the United States, registered as a commodities trading advisor, as monitored by Barclays Hedge. So if you're doing more than 2% a month, you're exceeding the benchmark, likely through leverage. Project Red? That's interesting. Oh, right on, man. Wayne, by the way, I have improved so much. Awesome. How about if you were scalping? Scalping what? So I covered scalping today. Euro dollar, how, what? I don't know. Are you bullish or bearish? Oh, if you're making 2% a month. No, I'm just saying if you're a professional trader, licensed and registered in the United States as a commodities trading advisor, trading over $100 million a year, if you're doing 2% a month, you are the best. So if you're going to beat that benchmark, you're doing it through leverage. So if you made 3% today, you're over leveraged relative to a professional trader. Remember, leverage isn't good. No one's going to say, oh, great, you're over leveraged. That's awesome. Okay? No. You want risk-adjusted returns. So very often what you see is people will take 150 pip losses, but they'll take profit at 50 or 100 pips. So you're like, wait, you'll take a drawdown of 150 pips, but you rarely get over 100 pips profit. Your pain to gain ratio sucks. What the hell's wrong with you? Right? Like, yeah, risk adjusted performance is always key. Okay. Remember the psychology of money. People that have no money will risk it all. People with tons of money don't want to risk anything. If anyone has played poker, they know this. It's part of the game. When you get short stacked, you have to go all in a lot. You have to push because you can't catch up. You can't beat someone with 5 times more money than you because they can push you around. So you gotta take these wild and crazy chances. Okay? So people with no money, it's shown psychologically, right? When you have nothing to lose, you'll risk it all. You were poor yesterday, so you're okay being poor tomorrow. You meet somebody rich, the worst fear ever is becoming poor. They're like, oh my God, don't take any risk. Like, none. None. Okay? So, if you're making, 30% a month, it's because you don't have any money. Okay? It's sort of like looking at the economic growth of a poor country and noticing it's growing at 7%. You're like, wow, that's great. Yeah, growing at 7% from nothing. So if your 30% monthly return is $3, it's because you started with nothing and nobody cares about the $3. Right? So it's like, do you care about the internal rate of return or do you care about the absolute return? Right? Oh, there's no risk if you're risking it all, but there's no money. Yeah. So, it's an attack on risk. I want you guys to understand my message and don't get lost in it. Risk is bad. So a high growth rate is going to be interpreted as you taking too much risk. What people are going to pay you money for, the value creation that you offer, is steady and consistent returns. Okay? Because a wealthy person can buy a bond, a wealthy person can buy an apartment building. So for example, you can buy an apartment building, 100 people are going to pay you rent. Maybe you have 3 apartments empty, and maybe one decides to stiff you and not pay you your rent. But you build that into the model, and you're like, okay, that's fine. But you know what to expect for rent that you're collecting. You know what your cost of financing is. You know what your monthly costs are for electricity and insurance. You got all that built in. And what happens is there's a very, 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 very steady cash flow. But you can also, on top of that, because you can do the calculations based on your rent and your ability to increase rent over time, right? And the shortage or the supply and demand of places to live in your neighborhood or your city, that your building should also appreciate over time. So when you sell your building in 10 years, you'll sell it for more than you paid, plus you collected the profits from your cash flows. And so a wealthy person can simply buy an apartment building. But you come along, you're like, hey, invest into me. And they're going to say, well, I can buy another apartment building. They don't want the cash. They have cash, right? So now they got all this cash. They're like, well, I'll just buy a second apartment building. And I know if I buy that, I'm going to make 9% a year every year. I don't have to do anything. I don't have to think about it. I don't have to sweat bullets at night. I'm just going to own this thing. I'm going to make, $90,000 a year because I own a piece of paper. The management company gets paid. The bank gets paid. Everybody gets paid. And at the end of the day, when I do nothing, I collect, $7,000 a month in my pocket doing nothing. Meanwhile, in 10 years when I sell the building, I'll make another $1 million on top of that, or $250,000 or $100,000, whatever it is. But you're like, I make $7,000 a month doing nothing, and then 10 years from now, I'm going to sell this piece of paper to someone else. I'm going to pick up $250,000. And then you come along, you're like, well, I'll gamble the whole thing in the foreign exchange market. You're like, no, I'm not really interested. You see? Oh, I can make 30% in a month. Well, I'm not really interested. Because they can just take the money and just buy something else and it just produces an income. Okay? So owning real estate is a business. Lending money to Ford Motor Company is a business. You lend them money, they will pay you back plus interest. You're a bank now if you buy a bond. So you're competing against steady, consistent, low risk, or relatively low risk business decisions. So someone with a lot of money isn't interested in your crazy Forex scheme where you turn nothing into a whole bunch very quickly. People with money they're not interested in that because they already have a bunch of money. Now, they might invest into you because they like you. They might invest into you because you have a really cool story and that they have bragging rights. And they might invest into you because they have enough apartment buildings. They're thinking about going from their, from their 48-foot bayliner to their 52-foot bayliner. And you come in and you're like, you know what? Don't get a different boat. Why don't you just keep the one you got and instead put some money into me and I'll trade it. And they like you and they think it's a cool story and they have bragging rights. And very often that's what matter. But you going in saying, I can make you a bunch of money quick, you have to understand a self-made person know that that's stupid. A self-made person knows that's ridiculous. Hey, we can make a bunch of money really quick. That's not a sales pitch to a self-made person. Okay? That might work for someone that doesn't have any money. That might work with some stupid guy that has a bunch of money. They didn't make it themselves. And they fall for that. And if they lose it, they don't care because they have so much money. But for most people, getting rich quick is ridiculous. It's laughable. Like they'll bust a gut laughing on the floor. So you can't come in with that. Okay? And in fact, if you're trying to do it, that's the problem. So if I can get you away from thinking like that and instead get you focused more on value creation, which means you have to be able to compete against an apartment building. You're going to have to compete against a bond. Okay? Which means you have very steady, predictable returns with as low risk possible. If you can put together a story like that and be able to prove it, you will be valuable because you create value. Okay? You're able to create value, so therefore you're valuable, valuable. And someone will invest into value. People will buy value. But no one's interested in the story. The get rich quick story just simply doesn't work unless you're lost in the clouds. Okay? Yeah, so, right? So think of it that way. Just think of it that way. Right? Rich people make, and just regular people. I don't know what part of the world you're in and all that kind of stuff, but regular people, by regular people, like people that have careers. They put money into the stock market through their 401k at work. They buy a house through having a mortgage. So over the last 10 years, regular people have made a boatload of money in the stock market and the housing market. Stock market's up, all-time highs. A regular person in America with a job and a career, a kind of company that gives you a 401k to begin with, and ideally a sane person is maxing that out, they've made a boatload of money. Whatever that is. Right? but they're conservative. Okay? And the get-rich-quick stories that you're probably going to hear, oh, John Doe made $1 billion on his GameStop trade. You're going to read about all these stories. You're going to go, oh, man, he got rich quick. And, oh, I could have been in that. Dude, if it wasn't predictable, it doesn't matter. It didn't happen. Okay? What you want is logic, intelligence. Through your analysis, you can identify and create value. If you didn't identify it, you shouldn't even know about it. That's why I say things like, when someone says, what about the pound Aussie? I'm like, I don't even want to look at it. Because God forbid, I'll see an amazing chart and I'll trade it. It doesn't make any sense to me, so I don't want to see it. It might make sense to you, but you're looking at it from a different point of view. So like, if so-and-so made a whole bunch of money because of what's happening on these short squeezes and stuff, okay, it's kind of fun. It's cool, right on, but I'm not really interested in it. What I'm interested in is how are we going to plan next week and next month and the rest of the year so that we can make very logical, intelligent investment decisions based on rational reality, because I'm trying to gain steady returns with low risk. That's why I teach you things like Sharpe ratios, because it'll be very important to you down the line. Cool. Okay. Cool. So I guess I'll see some of you guys later today. The rest of y'all, all y'all, I'll see tomorrow. Thank you for being part of the Forex.Today YouTube community. Thank you for the like. Thank you for the positive energy you shared with me in the chat. Thank you for leaving comments on the recording and all that kind of stuff. And thanks for just being, you. You're good people. So thank you for being here every single day. I think that's cool. Have a wonderful day.